Welcome to another episode of the Weekly Crypto Check-In, recorded on September the 18th, 2024. I'm your host, Robert Swarthout, and I'm joined by my co-host, Andres Sandate. How's it going, Andres?
Hey, Robert. It's good. We're both traveling this coming weekend. It's fall break for me and the kids. So Heidi and I we're getting out of town, so that'll be fun. It feels like we're a week away, but we're really only down to like a couple days, as we talked about. So lots to do, including an important check-in and a game.
Yes, we're going to play a game. We've never played a game before. This should be fun. So let's just get rolling here. The first one being the UK has introduced a bill that would legally recognize crypto as personal property in the case, because it would help clarify taxes, how to deal with an inheritance tax, and just general ownership. It'd be treated as if it's no different than a vehicle or a house, which is pretty cool. Maybe the U.S. will pay attention here and follow suit. So.
I was curious on this with respect to how long do you think this has been in motion? I mean, sometimes we get these headlines and we send the message that we are so far behind, but in reality, this has probably been something that's being, has been in development for some time. Do you have any idea?
I don't, and admittedly, it caught me off guard because the UK has done a lot of work around crypto regulation, but they didn't have this piece. You'd think it would have been part of the initial thing. Obviously not, but we are learning that, I would say the UK, Europe, and Singapore, and a few other countries, maybe 5 or 6 other countries or regions are more thought to be more ahead, and they certainly are in many cases, but maybe some of the simple building blocks they are not on. So,
the one of the things that comes to mind is around insurance, right? I'm studying for the CFP. I told you, and it's like immediately I go to, okay, if I have all this crypto and I go and get, let's just say an insurance policy on whether it's not jewelry, it's not let's say a valuable watch or jewels or something, but it's crypto, right? Is that something that can be captured in a personal like articles policy?
Yeah,
much like a piece of art, or
I mean, heck, all you need is to find one company willing to write a policy. And Lloyd's may be the only place you get that.
I knew you were going to say Lloyd's. Yeah, they love this type of stuff. Yeah.
But we will.
We'll have to see how this plays out.
More commonplace. And there's certainly safeguards you can put in place with custody that aren't just so isolated or so concentrated with risk being with yourself, for instance. So,
yeah.
Yep.
Interesting.
So our next topic, we've only been doing this podcast for, I don't know, 3 months, 4 months. Had we been doing this back in 2020, or 2018 to 2021, this would have been a headline. But it's ironic that it is coming back up again. So Grayscale, obviously, they're an issuer of different things. Typically, they're best known for their trust that they do. They have their private placements for accredited investors to, in this case, buy XRP or buy Bitcoin. Their Bitcoin and their Ethereum one have both been converted into ETFs as those come along. So they are launching an XRP trust. Well, on the surface, this seems like a great thing. Well, they had one, and then after the SEC sued Ripple, they basically wound it down. So now they're starting it back up again. Generally, I think the thought around this is this may signal that there could be an ETF for XRP coming down the line. They're trying to, they at least think they see some market demand to doing this, or they wouldn't even bother. So I don't know, just a headline. We're not getting any ETFs anytime soon. In my opinion, it's going to be sometime next year before anything gets discussed. So
but for these issuers, Robert, one of the playbooks, and I heard this from a very high up executive at one of the issuers that has done very well with their first ETF, the Bitcoin ETF, say there's some strategy to launching these, I'll call it trusts or other types of vehicles, regulated vehicles, in a way, because it puts a precedent out there, right?
Oh, absolutely.
That the regulator has to sort of evaluate it, weigh in, And whether it's a, unique, quick, whatever word you want to describe, way to potentially lead the charge into potentially an ETF one day. I don't know that that's thinking at Grayscale. I know that they hit my inbox, it seems like, with a new trust product once a week.
Yeah. The part that I would add there is, if it wasn't for Grayscale having their Bitcoin trust and it had been established and showed market stable prices relative to crypto, there's unlikely we would have an ETF at this point, because they were the ones that sued the SEC, and then the court basically said, yes, you should allow them to convert into an ETF, and that's what kind of paved the way. Not to say that's exactly the same problem here, but it kind of leads to what you're saying there.
Yeah. Yep.
I guess we'll just go on to number 3 here. There's a bill that was introduced by a Republican from Tennessee, Representative John Rose, sits in the Financial Services Committee, is introducing a new bill called the Bridge Digital Asset Act. The idea is, in some ways, to bring these two fighting groups, the CFTC and the SEC, together, to come together and say, can't we all just come together and regulate this industry?
Yeah.
This is another angle at trying to get regulations in place. The SEC does have the ability to write rules here. Congress can come along and say they're good or bad, but they can be ahead of Congress if they want to be. They choose not to be right now. And I don't know. I think this is great. I think this is where it ends up. I don't see it happening anytime soon. And we'll kind of get to that, I think, a little bit later, our last thing with crypto and Congress. But it's I don't understand why we have to have so many people saying the same thing and regulators not wanting to do any of it.
Yeah. Well, they get to move at they, being the regulators, get to move at a pace, relative to their agenda, their mandate. I was at an investment conference last week, and on the regulatory panel was, a former SEC attorney, a current now in private practice with a big top 10 law firm, another, securities attorney within private practice, and both. Unfortunately, the guy in the middle was a lobbyist, and they just talked back and forth the whole time. Yeah. It wasn't about crypto, but it was about, in this case, Regulation BI, which is Regulation Best Interest, which I'll bring this back to crypto because it threw such a wrench or a tailspin, or forced a lot of these financial advisors and investment product sponsors over the last 2 to 3 years to do a whole lot of work with their securities attorneys, their lawyers, their compliance firms, to sort of prepare for new regulation. And what's the impact of regulation? Are we going to have regulation? Only to find out, sitting on this panel, that there's as much uncertainty on the financial side of non-crypto, like with respect to alternatives, as there's ever been. And the position from both these lawyers was, the SEC clearly has a regulation by enforcement approach, just because writing legislation, getting these, in this case, CFTC and SEC to come together, create sensible legislation. They spent years writing this new fiduciary rule, right? And then it got struck down in the courts, right? So even if we get legislation or we don't get legislation, to your point, uncertainty abounds all over the place. And yes, you should be thinking about investor protection. Yes, we should be thinking about how can we create better, more fluid, more functioning capital markets, et cetera. But uncertainty is not fluid. Uncertainty is only really making money for the lawyers, unfortunately. I'm not a lawyer basher, but it's so frustrating when you go and hear this, and it's like, we've heard this for years, and now it's happening in crypto.
Yeah, and I read something recently that talked about, like, yes, Congress, say they snap their fingers and tomorrow there's regulation. Regulations are not terribly detailed when Congress writes them. They leave it up to these 3-letter agencies to kind of fill in the gaps, right?
Right.
Good or bad. And then you recently had the ruling for the Supreme Court with the EPA going back to the 70s with Exxon, and basically how it's saying the EPA overstepped what it's allowed to do. So now Congress has to kind of come back in potentially. It's like, I can see how an agency, I'm not trying to be defensive of the SEC here, but how they may be hesitant.
Are you talking about the Chevron case?
I'm sorry, the Chevron case.
Yeah. That was mentioned multiple times in this conference. Yeah, things like that, I mean,
Yeah.
force a lot of parties thinking, okay, this is a settled matter, to now it's like go back and
Right.
okay, we're not done yet.
Yeah, I mean, and admittedly, that happened in the last couple months.
Yeah.
Court.
Yeah.
So the SEC doesn't get full no blame here because they've been at this for over 3 years, but
Right.
we
Right.
are still challenged by it.
So what are the odds that we see something in the next, 3 years, 5 years with respect to crypto where two major agencies come together and say, okay, we're going to jointly regulate?
I would put it at the longer end of 3 years.
Yeah.
In the near term, I just use the example. When Trump was in his first term and he had control of the House and the Senate, it took him 2 years to get a tax bill done. Like,
Yeah.
and they were all in agreement. Like,
Right.
even if they're all in agreement on crypto, it's not going to be like 3 months. That would be almost like they're responding as a national emergency of some kind. So.
Yeah. And it's rare that agencies want to give up their turf, right? So the
Correct.
idea that the CFTC says all of a sudden, oh, you can go regulate pork bellies or you can go
Mhm.
regulate, commodities to the SEC is probably not something on their agenda. So,
Yeah. Yeah.
all
Cool. Well,
right. True or
let's
false? I am so
let's play a
intrigued.
game. So I'm going to ask
Okay.
a question, and you're going to say true or false. Okay.
Okay.
Um,
This is not securities advice. We are only
yes.
playing a game here. This is
Yes.
not securities advice.
Well,
Consult with your
there's no
attorney and
buying or
advisor.
selling of anything here,
Okay.
so we should be safe. If you heard that the SEC said crypto asset security, and they are regretting that they may have intended. This mean I'm tongue-tied. The unintended consequence was they confused the market. Would you believe that?
The unintended consequences. Mm, I don't know that I could believe them. I'd say false.
Okay. Well, they did say this. So in the footnote of an amended complaint against Coinbase,
The
they like literally,
the famous crypto asset security
yes,
that
that
this
Gensler
long
loves to run around with.
convoluted name.
Yes, yes. So,
They're
um,
backpedaling.
so basically, the SEC says they regret the confusion it may have invited by using the term crypto asset security. So
You don't
it
say.
you don't say. So the next and final question is: would the SEC ever use that term again?
I'm going to say yes. They probably would. That's true. I think they will turn around and use it again. Yes.
Yes. So the next day they used it 6 more times in a different case.
Oh my.
So they are a 10-headed monster. So
It's
maybe they weren't talking to each
interesting.
other, or maybe they just purely don't care about the confusion. I find most of this, I guess, entertaining. Unfortunately, it's a sick form of entertainment, I suppose, but it's just
So to
crazy.
summarize, in one case, they went before the judge and said and they filed a brief, or they filed
Mhm.
some
Yeah.
legal document that basically said we regret that we used this term. It was confusing to the market.
Effectively, yes.
Yeah, and we won't, like, I don't know if they said we won't do it again, but we'll come up with a different term.
Well, I can't imagine they were going to be specific about what they're going to do because they don't like to be clear about anything.
Yeah,
Um,
no. But then the next day, literally in
Brilliant.
another case, they
Yes, 6
use
times.
and I would assume it was an enforcement action, like they brought against somebody.
Right. Yes. I don't remember the exact context. Yeah.
They claimed that they were selling, crypto asset securities
Yes. So,
unregistered.
I guess what helps them in one case doesn't necessarily help them in another, so they can maybe say 2 different things. I don't know. It's just,
Wow.
we just bring this up, I guess, A, to laugh at it, and B, just to kind of show the hypocrisy within the agency, even amongst attorneys. Attorneys are obviously writing both of these things to see that they can't even get their story straight. So,
Yeah, it's got to be incredibly tough out there for folks that are on the very front lines, doing these projects and launching product to try to figure out how to navigate amidst
yeah.
this. And to your point, like it's one of the reasons why maybe it is the biggest point why
Mhm.
there hasn't been more broad adoption, why we continue to maybe see, I don't want to say it's the reason prices trade the way they trade, but certainly market adoption and
Right.
skepticism and overall just sentiment towards the space. There's a lot of people that are sort of in still a wait and see approach.
Yeah, and admittedly, this piece that I'm about to say didn't make it in our topic list here, but I read just the other day that, and I believe it was A16Z, the big VC out of California. They are launching or seeding the initial $1 million of funds to go into a quote unquote fund that would pay for people starting projects to see if the project for NFTs or crypto stuff are within the quote unquote rules and regulations of the US. The idea that we even have to do this shows the problem that we have. Like, and obviously it's probably a little bit self-serving for them because they probably are dealing with a lot of this. So maybe they're trying to, do a little bit less duplicate effort. But it's it's cool to see them doing it, but it's just sad that this is how funds have to be spent versus actually creating true value. So
yeah.
So talk about value. It'll be our next topic. So if we rewind, goodness, I think 2 months ago, maybe, Bitstamp, it was a crypto exchange, one of the oldest ones, was purchased by Robinhood for $200 million. We talked about that. That was the news event. You're trying to tie all this together here. One of the investors in Bitstamp was Ripple. We talked a lot about them. They obviously use the XRP ledger in their products. They are this obviously has been something that's been in the works for a while, but Bitstamp is launching in the next month or two, a derivatives exchange that is leveraged off of or runs off of, I'm not exactly clear on the details, the XRP ledger, that is going to be focused at traditional wealth advisors, is my understanding. So it's just kind of this weird mix-up of stuff. And obviously, I don't know how Robinhood plays in on that, just beyond the fact that they just purely own Bitstamp. Maybe some of the Robinhood clients can buy into this stuff, but it's interesting to kind of see it. And it's and the crazy part about all this is the Robinhood transaction with Bitstamp hasn't closed. It doesn't close until the first half of 2025. So like, there's all this extra news and stuff. I don't know. I guess it's business as usual for Bitstamp until the wire hits their account for being sold. But
as an RIA, I'm curious if Robinhood is going to try to position itself to do more on the institutional or advisor side of the business. I mean, obviously they were born to focus on that do-it-yourself, retail, investor, trader. Huge amount of growth during COVID, when folks were stuck at home and were trading without abandon, I should say. Now I'm sort of seeing a lot more moves that Robinhood's making of this more strategic stance, where it's not just stocks, it's not just crypto, but it's things like derivatives, it's things like more advanced products and services within the capital markets. It'll be interesting to see what they do within the RIA market. I haven't ever been called on by them. That may be a reflection of the size of my firm, or maybe a reflection of they're just not focused on RIAs yet. But look at where Schwab is. Look at where NFS or Fidelity is. TD was acquired by Schwab. Those firms are still relatively conservative when it comes to digital assets and crypto. Robinhood maybe sees a window here, maybe sees an opportunity. So.
Yeah, and you would think, not that the other ones don't have technology, but like Robinhood was born in a technology age, right? Like they came out of nowhere versus the legacy tech that some of these others may have to drag around. So this may allow them to be a little bit more nimble when it comes to stuff like this. So I'm sure there's more to come on this, and will be interesting to watch. So kind of jumping back to the SEC, all 5 commissioners are going to be testifying in front of the House Financial Services Committee next Tuesday.
Get your popcorn ready. I can't wait. Wow.
Gosh, I mean, I hope they set aside the whole day because they need it. But it's the first time all of them have been in front of the commission, not just the chair, since 2019. So this is a bit of a big deal.
Is this a broad discussion about, like what we said earlier in the check-in, about everything from, individual investor regulations and updates there and fiduciary rules to things like crypto and other areas? Do you know?
I don't know. I mean, and my guess is, since they didn't say what's coming, my guess is it will be broad. Because a lot of the times when I do see stuff about a hearing coming up, a lot of times it does have a specific focus topic. But
Yeah.
This will be live streamable if you have the time and want to watch watch the dynamic. What I think is fascinating, if you remember, is two of them are Republican nominated, two of them are Democrat nominated. Then you have Gensler, which kind of rounds out the, if you want to say, the Democrat side of the House at three. Like there is certainly a contentious working relationship there with Hester Peirce and, gosh, I forget the guy's name offhand, but they all often are writing rebuttals and posting them as blog posts when something happens, at least in the crypto space where I pay attention.
Yeah.
So
yeah, I mean, the idea that you can say the SEC is this monolithic, like everybody is on the same sort of page, the cliche around crypto and regulation is just not the case. I mean, as you dig in, there are clearly folks that are further along in the idea that we need regulation, we need sensible regulation. We're missing out on an opportunity. We could be figuring out a lot of the things around stablecoin legislation. We could be addressing a lot of this differently than through enforcement. And then there seems to be a group that's saying, no, we're
right.
we're going to flush out all the bad actors, and we're going to get clarity, and the future of this industry will be, largely once we get rid of all the bad actors. And it's just, I don't, it's interesting. And then you have, Gensler. So
yes. Yeah. So our second to last topic here, volatility galore. So generally in the crypto market, Q3 is not a good time to be in the market. It's normally a negative quarter. Q4 is generally the most positive quarter. So anyone in crypto is probably looking forward to October the 1st at this point.
And why is that? Why is the third? I mean, are we just talking about histrionics here?
Yeah, absolutely. Just quarterly returns since basically early 2013. And it is broken apart. What's crazy is, if you rewind, crypto had a crazy Q3 and Q4 in 2022, specifically Q4. That was the whole FTX blow up, right? Crypto is down 14.7% in that quarter, or excuse me, Bitcoin specifically. If you look at the last two quarters, Q2 and Q3, you're almost 18%. So it's been more of a down, I guess, 6 months in this case, but it's hopefully we start to see some green candles because it's getting a little exhausting to always see red.
Yeah, there's a lot I'd love to dig into with out of respect of the amount of time we have and still having a big meaty topic like crypto in Congress. So when you look back over history, since you've been in this space for some time now and been through these cycles, is the history of the Q3, Q4, is it across all tokens generally? Is it?
Yes, generally, I would say, with a caveat, usually Bitcoin is the first mover. So you may see something. I wouldn't say it moves the next quarter. It could be later in the same quarter. The altcoins could be moving. But just to kind of show you the crazy difference. So the average Q3 over the last 11 years is up 5.39%. Granted, we were down 6.7 right now, but up 5.3. That same, basically for a Q4 over that same 11-year period, or excuse me, 10-year period, is up 88% on average. So drastic difference. And it's and sometimes it'll bleed into Q1 too. So it's not exactly on the quarter marks, but it's close. So
yeah, that'd be an interesting paper to sort of dig into if somebody's written it. I'm sure somebody has studied that as to where, because I don't get the sense, again, this is just perception. I think about wealth advisors and individual investors who want to own crypto long term. They're not buying NFTs. They're not, looking for yield through DeFi strategies. They're looking for exposure to this asset class, and they want to be long the space. They want to be in it for a long period of time. Like, the idea that customer is buying in the third, on dips with the expectation of like owning in the fourth, and then looking to, get out of the trade or get out of the position in like Q1, Q2. Like, I just don't think that, I don't know. I don't think that's the customer that I'm thinking of. I think these are people that are like, is now the time to get in? How do I own it? How much should I buy? So I'm curious, like, who the market participants are that drive a lot of that volume, because there clearly are traders out there, retail individual traders that are speculating, buying. We know funds, obviously, both of us, who are just opportunistic. I just am curious, who that market participant really is. That's behind this.
I don't know the answer, but my gut tells me, just to think back, the majority of trading that happens in crypto is done by bots. So you have that, you strip that away. And I think it's just purely that, I wouldn't call them professional traders, but maybe a guy in his basement wanting to swing trade crypto. The term swing trade is hugely popular in the crypto space. For better or for worse, most people probably aren't great at it. And
but that's just capturing opportunity through the vol that's out there in the market.
Right. And you have to remember that a lot of crypto seems to repeat a cycle, and those bots are trained or programmed around those cycles. So it's a bit reinforcing that you have these technical levels that are traded against. So I think a lot of that starts to go with regulation, and just as the market kind of matures a little bit, you have less of this volatility swing. It's still going to be volatile, but I don't think it's as extreme, the highs and the lows. So
yeah, it makes me wonder how much influence that segment of the market has on fundamentals, right? Fundamental stories. Like if you say, well, we're all about utility, we're all about like these projects, they're getting milestones, these teams, they're actually, getting traction. All of a sudden, swing traders show up on the scene, say, sorry, I don't give a crap about your projects and milestones. It's an opportunity to take profits. It just seems like so much of that happens, that the person who, or the party or the actor who is in the market for long-term fundamental value creation, blah blah blah, is somewhat, I don't want to say at the mercy, but there's a lot of whiplash.
So our last topic, I guess this is more of a check-in on the whole concept that the Harris campaign had brought up. I would say more than 2 months ago, because she hadn't been a candidate for that long, maybe 3 or 4 weeks ago, around there was going to be a crypto reset. And people, especially Democrat-leaning crypto people, were like, yes, she's going to come in and we're going to have a better way to think about this going forward. So here we are.
I'm still waiting to hear that, by the way.
We're still waiting on that and a lot of other things, admittedly. So there's a hearing today, the Financial Services Committee. I don't know the exact details, but there is a crypto piece to it. Part of the comments were pre-released because they're always written a lot of times. And the Democrats that lead up that committee basically said that the FIT 21, so the Financial Innovation Technology Act, FIT 21, was around trying to get some regulations and framework in place for stablecoins. It was, or is, quote, particularly harmful piece of legislation, is the way the Democrats are describing it. And then they go to the next point is, crypto is the work of extreme MAGA Republicans. So it sounds like the reset is going really well.
Wow. That's strong language at this
extremely
point
strong language,
in the election. Who wrote that? Like, do we have an author?
Goodness. I don't have that offhand.
I mean, just because Trump and his sons did a live stream that got 160,000 viewers to talk about a crypto project does not mean that they're driving the crypto agenda. It just means that they believe that there's an opportunity. I'm surprised, to be honest. I hadn't seen that.
Yeah, so this was just quoted as the Democrat leadership. Maybe it was co-authored. I don't know.
So needless to say, it didn't seem like the reset an opportunity to sort of, with a fresh, somewhat, you could say, a fresh approach to crypto. Maybe that's realistic or idealistic thinking, I should say, on the part of the crypto industry that we were going to see that. But based on the tone and the way that was written, it doesn't sound like that's happening anytime soon.
Yeah, I mean, I believed it at the time, and I guess this is just more backing up my belief at this point that the whole crypto reset was this political theater, and it appears to be nothing but at this point.
Watch what they do, not what they say.
Yes. Awesome. Well, thanks for joining us on this episode of Weekly Crypto Check-In. If you want to stay updated on future episodes, you can find us in any podcast player by searching Teton Crypto Capital or the Weekly Crypto Check-In. Take care.